Welcome to PreciousMetalsInvesting.com. My name is Ted Sudol, and I have the pleasure of having as my guest today Paul Majanovic. Paul is the author of Precious Metals Investing for Dummies. He also has his own website, ravingcapitalist.com. Welcome, Paul.
Yeah, good to be back on the program, Ted. And you know, it's interesting. I think we got the email coming in inquiring about was from Sergey from Bratislava was asking about what happened with the Swiss franc. You know what I mean? And Sergey is probably talking on behalf of lots of viewers out there wondering what are the implications on that kind of day. First of all, what happened that day? You end up finding out that basically a price control on the Swiss franc, had abruptly ended that day. In other words, the Swiss National Bank was trying, and it did so for a number of years, trying to peg the Swiss franc to the euro. Basically, it's a price control, trying to manage the currency and maintain that relationship. But you know what? Considering how they've been overproducing the euro and the constraints couldn't be kept on much longer, I think for the most part, the main manager of the Swiss franc, the Swiss National Bank, couldn't keep up that pretense any longer. In other words, price controls, like any other form of manipulation, in terms of like where a bureaucratic entity or a financial or a central bank tries to maintain a price on a particular entity, whether it's a currency or it could be the price of milk, it could be the silver price, it could be a lot of things, But you'll end up finding out that those things are temporary, In other words, if there's one thing that a marketplace that can, in the long run, overpowers any individual bank or individual country or bureaucracy, is that the idea about maintaining the price of something. You get to the point where, look, the market price, if it doesn't bear any relationship to it, ends up being, a day of reckoning. They couldn't maintain the Swiss franc at that level anymore. And what ended up happening was this. In other words, basically, the full intent of it was to artificially keep the price of the Swiss franc lower, in relation, to the other currencies out there, but that couldn't be maintained any longer. So it blew up on the other side, and it went up 30%. In other words, anybody who was long the Swiss franc the day before and held on, and was long, would have made a fabulous fortune in a relatively short period of time. But the thing is this, what's the message for us here at PreciousMetalsInvesting.com? The basic message is this, look, and this is a message that's gone on for a long time. It's not a fresh message. But sometimes the old answers come up in the same markets or in different markets. When the housing market was artificially raised to unsustainable levels, it came crashing down. The Swiss franc, when it was maintained at a lower level, basically melted up. And so the thing is, what happens with everything else out there when there's commodities that are managed, whether it's the goods or services, or in this case financial entities? The opposite whipsaw effect could come through. So this is actually a harbinger that's very positive for long-term investors of gold and silver.
Mm-hmm. It is very positive, and I think that, as you said, it is sort of analogous to what's going to, or what we think is going to happen with precious metals versus the dollar. Because I think at the root of it all, we're calling it, calling into question trust.
Well, I don't know how much politicians and bureaucrats can keep up certain pretexts of what they're doing, but the bottom line is that I think one of the most, easily predictable things to happen in the coming months and years is going to be a major crisis with the currencies. It could happen with the dollar. It could happen. I mean, it's already, you see a lot of people long-term feeling very skeptical about the euro's long-term viability. One of the hallmarks about the Swiss franc, I think is quite interesting, is that over the decades, it's been one of the few currencies that was not, in a relative sense, as overproduced, as many other currencies. So, in other words, the very essence of money is that it has to retain certain scarcity for it to retain value. If it becomes so ubiquitous and so overproduced, then each individual unit of that currency will lose value, right? Like anything else out there. Mm-hmm. I mean, how much do we value a grain of sand? Not very much, because there's trillions and trillions of grains of sand out there, and that's just one beach. Okay, so the same thing is in essence, happening with the Swiss franc. If you recall, during the '70s, or maybe a major bull market in energy and precious metals was the late '70s, and in that regard, inflation was a major hazard across the globe. But one of the safe harbors in those inflationary times in terms of a currency was the Swiss franc. So the Swiss, I think, and I'm talking about comparatively, not in an absolute sense, but comparatively, know more about managing a currency so that they're not overproduced, unlike the other currencies that are out there. So we're going to keep on watching this one, but let's see what happens to the unintended consequences. What happens to the valuations of these other currencies as the months proceed?
Right. And I think we've seen that this is just one of the currency cracks that's appearing now that is a very good harbinger for the precious metals.
No, I think that's so true. I think probably one of the great, hallmark points over time is that you invest in value that where the quantity is generally low compared to everything else. Because if everything else is being overprinted, then what? In a relative sense, it does well. So more about this in future videos, right? Then.
Right. How much do you value a dollar if you just keep printing them up? I mean, that's how Milton Bradley found out what the value of the monopoly dollar is.
Exactly.
Or the Zimbabwe dollar.
That's right, exactly right. So, Sergey from Bratislava, let's hope you have more of the currencies that are going to be going up in the coming months.
Thank you, Paul, for being with us today at preciousmetalsinvesting.com. My name is Ted Sudol. Make sure you visit Paul's website, ravingcapitalist.com. Thank you.